Well, good morning, and thank you for joining our webinar today. We're here today to discuss navigating third-party delivery services. Because the long and short of it is we are now faced with off-premise dining being a larger percentage of revenue due to economic necessity and basically a permanent shift in guest dining habits. So we're here to make sure that you are aware of all things need to be considered for a successful pivot to off-premise dining. My name is Lynn, and I am joined today with Brian McCaig. Brian and I are both client advisors here at RSI. Our client advisory department offers a wide range of consultation services for our clients. So after this webinar, anytime in the future, feel free to reach out to us for any information regarding our services. Now, the purpose of our call today is to provide a deeper understanding of what a marketplace facilitator means to you. We're also going to discuss the importance of accurate reconciliation and reporting and things to consider on that. We're also going to go over some operational recommendations to ensure a smooth and seamless process for your employees and your guest experience. And we also want to discuss not only the importance of marketing, but other considerations to think about as well when it comes to cost, execution, etc. So with that, I think it's a perfect time, Brian, for our first poll question of the day. What do you got for us?
Let's do it. Yeah, we're actually going to have a couple poll questions throughout the presentation, so I'd encourage everybody to participate. It'll pop up on your screen, let you get your answer in, and then we'll share and talk about the results. So fun way to keep involved in the presentation. In addition, I want to point out there's a Q&A section of the Zoom webinar. And we're going to try to save some time towards the end of the presentation to get to any live questions that come up. So I'd encourage you to use that section of the webinar as well. But that being said, let's get on to our first poll question. And it's pretty simple. Let's see, it should be up on your screen now, but who is responsible for remitting sales tax for third-party delivery sales? I say it's pretty simple as a little bit tongue-in-cheek. We'll see here in a second. It's not very simple.
Probably the reason why we're going to talk about it today.
Probably the reason we're going to talk about it today. And I love, I'm seeing tons of responses come in. I'm going to actually give it another 10 seconds to make sure everybody gets a chance to get those in. Sid, you will not be surprised. The answers are literally all over the board. So I'm glad we're talking about this. All right, I'm going to end the presentation. And look at this. So the majority was agreed the restaurant is responsible for remitting those sales tax payments. But look at, I mean, delivery partner depends on the state or the region. And some people were honest enough to say, man, I never really thought about that. And I'll put myself in that boat just about a year ago before I learned more about this.
Yeah, it's probably the most misunderstood question, and it's probably the main reason why we actually wanted to have this call today.
Good point. Okay, well, with that being said, let's get on to it. And first things first, just flat out understanding marketplace facilitator and what does it mean? And like I said, if I'm being honest, this was not part of my my vocabulary until about a year and a half ago. And lately I've been seeing it come up more and more in restaurant periodicals and articles and those kind of things. All right, the nuts and bolts of it, marketplace facilitator is a person or group who contracts with marketplace sellers to facilitate, transmit, communicate, and offer acceptance between a purchaser, the customer, and the marketplace seller of tangible personal property, commodities, or service. They also collect the payment from the purchaser or the customer and transmit it to marketplace seller. So I'm sure that's absolutely clear to everybody and nobody has any further questions.
Not at all.
Let's dive into this a little deeper. Yeah, totally get it. To be honest with you, the reason this term even came up was a result of all the confusion from that last poll question. Which locality sales tax applies? If I have a restaurant in one locality and I'm delivering to another locality, who should be paying that sales tax or whose sales tax should be applying? There is a ton of confusion, and that's why there's so much talk about it lately. Just to get it out there, if the tax is not collected by the marketplace facilitator, meaning your third-party delivery service vendor, your delivery service partner, if it's not collected or collected incorrectly with incorrect information, the marketplace seller, meaning the restaurant, may still be liable to collect and remit those taxes, which can be scary. So let's get into it a little bit, and let's start off with, hey, why is this such a big deal lately? And it was trending there before the pandemic, but man, the pandemic has made third-party delivery services a big deal. So obviously, third-party delivery services are thriving during the pandemic, and it's going to make them a target in most jurisdictions over the next 3 or 4 years for audits. And like I said a second ago, potentially that means the restaurant a target as well. The global online food ordering industry, this is crazy, could grow from $35 billion in 2018, projected to over $365 billion by 2030. Bloomberg just put out an article just a couple months ago about these audit risks emerging for DoorDash, Grubhub, Uber Eats, the delivery service partner. But like I said, there's a lot of research the restaurant needs to do to make sure they aren't a part of this audit risk as well. All right. Let's talk about, first of all, take a step back, a little bit of a step back, and talk about which partner is right for you. Sid, you don't have to say yes to everybody.
No, absolutely not. You've got to make sure that you ask a few questions to determine, which one is the right fit for you and your demographic. The 4 largest providers are obviously DoorDash, Uber, Grubhub, and Postmates. And actually, Postmates just got brought out by Uber, so make that the big 3 providers. But if you zoom into your landscape in smaller markets, there may be a couple more delivery platforms that are available in your specific area. It's actually really important for you to know which kind have a foothold in each one in your specific area. One might be servicing more consumers than another. Ask them how many consumers are signed up for their services in your area. Get an idea of who the other restaurants are that are signed up with them as well, and see if there's someone you are in competition with or you may want to compete against. Ask them about their staffing on their drivers. How many are in operation during peak times? What's the length of delivery times on that? What's the tenure of the drivers? How long have they been with them? Remember, you are putting your brand in the hands of the provider and the drivers. So it is important you trust and have confidence in who you are working with. Now, when it comes to contract negotiations, you want to consider if you're going to use one provider or multiple. Some providers offer discounted pricing on fees for exclusivity if they're only using them. But though, keep in mind, customer loyalty on one specific platform actually has been on the decline more recently, and it's still a reality that going with a second, third, or even fourth DSP actually brings significant incremental revenue in most markets for most concepts. However, if one platform is leading the field in your market, then maybe an exclusivity deal might help bring down your fees and might be the right fit for you. Now, when it comes to the fees, there's different fee levels depending on marketing considerations. So this could also affect where your restaurant is placed in the list. Are you one of the first ones listed at the top of the mobile app? Are you a preferred restaurant? Are you using things like Dash Pass, or using those special offers that would be putting your placement at a better spot for consumers to find? These are all things that you have to consider and what's important to you and your brand when trying to select a provider. Another consideration will be your menu pricing and offerings. The largest DSPs used to disallow restaurants for charging more on menu items than on their delivery. But that restriction is generally gone now, and most restaurants are increasing menu prices to combat the fees. But you will have to verify that you have that option, especially if you're going to use multiple providers. You might not be able to charge more on one provider versus another one. So doing your due diligence on that research is going to be a key. The average price that we're seeing, if you are thinking about increasing your prices, is about 10% per menu item. Importantly, though, the POS system can handle the accurate tracking of those different prices between menus if you set it up properly. So that's going to be key as well. Now let's talk about the contracts. When you review the contract, you have to understand exactly where the fees are going. Some will have like a 10% fee base, and then when you order through their specific platform, you might have another 15% marketing fee added on top. But if you order directly through your website, then that fee isn't applicable. If you have a strong online digital presence and you're already directing a lot of traffic through your website, then this actually might be a good option for you. But just know that you can negotiate those fees. This is a little bit harder now that they're cornering the market, but we are seeing them coming down. Some states have put regulations that they can't charge over a certain amount, especially right now during COVID. But depending on how many locations you have, et cetera, all those fees are negotiable. So keep that in mind. And keep in mind that even though they might say, okay, your overall fees are 25%, but then if you look at the fine print, there's commission fees, transaction fees, merchant processing fees. I mean, it's all in the fine print. So read the fine print and carefully review the entire contract so you have no surprises. Another thing to consider is you have the ability to negotiate the number of pictures and your placement. And the more pictures you have, the better. People eat with their eyes. So keep that in mind as well. And most importantly, in addition, consider integration with your point of sale. In calculating the profitability of working with a DSP, restaurant operators understandably focus on just the fees. However, there are additional significant costs that are more controllable. And many of these can be lessened or even eliminated by integrating the orders originating from the DSP directly to the point of sale, eliminating that step of accepting the order, typing it into the point of sale, having human error by manually ringing it in. So think about that as well. Also, another benefit for the integration is the ability that the managers can actually offload the task of updating the delivery service platform menus. They just update the point of sale. That immediately automatically updates the information into the DSP platform menus. So another benefit to that as well. The three most common complaints from restaurant orders are the fees, poor customer service for the third-party drivers, and a lack of control from quality and presentation. So with those three things in mind, do your research on your delivery service platforms that are available and that you're considering. Look at their reviews and make sure that they're in line with your specific standards. Now, I know we've been discussing the selection and negotiation process, but obviously there's a lot of operational considerations as well. But Brian, before we get into that, how about another poll question?
Yeah, let's get to that poll question. One other thing I want to make sure to mention on the slide we're on right now, when we're talking about those taxes, and again, because this can be such a confusing process for everyone, is that there are different vendors in different regions, and the people who answered that question on that first poll question are right in a lot of ways, and it can be hard to keep track of what your local government requires. And even once you do, it seems that different vendors have different interpretations of those laws. So you can bet this is going to be ever-changing and heavily litigated in the upcoming years. In our research, we've seen plenty of restaurants who are actually inadvertently double-dipping when it comes to paying that sales tax or potentially collecting the sales tax. And there may be an opportunity to even incur unnecessary costs to your restaurant. So the takeaway from this section, the takeaway from this slide, start off by reaching out to your delivery service partner, your DSP. Ask them who's responsible for that tax remittance, and don't be surprised that this is likely to be a different answer with different companies. Once you know that answer, work on how to set up your POS accordingly. And always remember, if you're an RSI client, you have resources at RSI to assist you with these questions, whether it's your tax specialist or operations specialist. That being said, let's move on to the next poll question. Should be up on your screen now. And the question is, how many third-party delivery services do you currently have? You may say 0, 1 to 2, 3 to 4, or 5 or more. If you're answering 3 or more, 3 to 4, or 5 or more, stay tuned. There's going to be some things we can help you with managing that, because that can be a challenge as well, right, Sid?
Yeah. 3 or 4 gets pretty chaotic.
Can be a lot. Okay, we're seeing tons of answers come in. I'll share those results here in just a second. I want to make sure everybody gets a chance. So probably about 5 more seconds. Make sure to get your votes in. All right, I'm ending the polling. You should be able to see the results up on the screen. Looks like the majority of people have 3 or 4 different third-party delivery services. A decent number actually have 0, which is interesting to me. And maybe they want to vet out, and hopefully this webinar will help them decide whether partnering with a third-party delivery service will be the right move. Thank you so much for those results. Let's see. That being said, let's move into operational recommendations. All right, and starting off with the organization of execution. So many restaurants that I've been working with during the pandemic have been forced into this new stream of revenue that is new and possibly unfamiliar for them. It may have taken a back seat before. You may feel a lot differently about your to-go processes now that it's starting to make up such a big chunk of your overall sales. Whether you like it or not, you probably need to find ways to excel at executing this to-go curbside delivery. Is it clear to your delivery service partners that get the orders from you what the process is? Do you have a clearly labeled section in your restaurant for those delivery drivers to come pick it up and pick it up quickly as possible? It's up to you to really dummy-proof the organization and lessen the chance for mistakes. Sid mentioned it earlier. You're controlling the brand because this is a huge part of your brand now. Staffing considerations, another thing that's probably changed a lot for a lot of you. Do you understand the new staffing levels you need? Is one to-go specialist enough to expedite internal and third-party delivery services? Or are the sales actually limited enough right now that you can just have everybody pitch in as needed until you need a designated employee for to-go? Or maybe you need a few different employees designated for to-go because your sales are really strong. My best advice is ask for feedback from your staff and pay close attention to how long everything's taking to get out there. Let's talk about safety practices. So sealing the boxes seems to be a normal for now. How about hand washing sinks? Is there enough hand washing sinks available? Is it easily accessible for your to-go person who's executing that? And just because it's there doesn't mean they're using it. Are they using it frequently enough? Also, do you have a clear way for delivery drivers and to-go patrons to line up in social distance? Consolidated ordering. So we'll talk more specifically about this in a little bit. This is especially for those people on the poll who answered 3, 4, 5 different delivery service partners. So we'll talk a little more about that. But there are companies such as It's a Checkmate or Chowly who can really help with that consolidation. And the way these work is it all goes through one tablet for all your delivery service partners. So can really help. A lot of restaurants that I've been working with having success have been using some form of that to help organize everything. It's a lot to manage, right?
Yeah, and if you do have any questions. Oh, go ahead, Lee.
No, you're good.
I was just going to say, if you guys have questions on how to get your POS set up properly, reach out to your RSI specialist for assistance on this. They'll provide you the best practice on setting it up for ease of reconciliation, dynamic reporting, accounting of it for taxes, etc. Quite honestly, yeah.
It's a good thing to take away from this that the consolidated ordering, yeah, that helps with the execution of everything, but it also starts to help with streamlining the reports. And I think it's fair to say without this, these reports can be famously hard to decipher. And I might even say sometimes purposely hard to decipher, right, Sid?
Yeah, absolutely. They're going to try and get away with
fair.
something. Absolutely fair. So most importantly, you need to really make sure that you know exactly who's required to remit sales tax payments. Is it you or is it the delivery service provider? And to what Brian said earlier, it could be a combination of both. For those of you that said you have 3 or 4 platforms, 2 of those platforms, you might be responsible for remittance of sales tax, and the other 2, they might be. So if your DSP is responsible for remittance of sales tax, then you have to make sure that you set up your delivery menus as tax exempt and communicate that to your RSI tax specialist so you don't factor those sales into your monthly calculation. If you are responsible for taxes, then it should be set up as tax exclusive in your point of sale. But that's key, because if you are bringing in the sales tax and tendering it out and you're expecting that money back from the provider, they're not giving it back to you because they're actually paying it. So you're actually taking on a bigger hit if you're not accounting for it properly in the point of sale. So this is so important. And since the off-premise sales are going to be a larger percentage of your sales mix moving forward, I also suggest that you actually set up and track your revenue center reporting. This would mean that you want to have your delivery menu set up as its own revenue center outside of your normal dine-in menu. This way you guys can start getting some trend and insight into how much of your sales are off-premise and how much are dine-in, and being able to move forward with proper staffing levels, et cetera, based off of that information. Another big thing on the point of sale setup is you've got to set each up of your providers as their own non-cash tender. You know, every order has to be closed out to that specific vendor. This is going to help you with reconciling at the end of each week and period versus what was rung in and processed and what was the payment that you actually received from them. And a lot of times, you know, I'd be willing to bet there's probably a quarter of you with those 3 or 5 delivery service platforms that I doubt you're reconciling this on a weekly basis. And that can come back to bite you. Now, when it comes to the accounting, most restaurants are recording the gross sales of the delivery food and then deducting the delivery fees out as either an operating or a marketing expense. The difference between what's tendered and the deposit that hit your operating account is basically that total amount of fees that are going to hit your P&L. It's important for you guys to stay on top of this every week. So that you're getting the fully expected amount. Many times, if there's a customer complaint directly to the DSP provider, they're going to refund the customer and they're going to just automatically pass that refund back to you, regardless if it was your fault, you know, whether it was food, service, delivery, if, you know, it was completely their fault, they're still going to try and pass that charge back to you. So if you don't closely monitor their behavior on this, your fees could start skyrocketing at no fault of your own. Now, Brian had talked about discussing using only, you know, a platform for consolidation of ordering. If you are using multiple service providers, this might be key for you because not only will it help with streamlining the ordering process, but it also helps with the consolidation of the reporting as well. You know, he mentioned CheckMate and Chowly. These are they consolidate the order, they consolidate the reporting into one reporting tool. So this is going to allow you guys to see the impact that each DSP is having on not only top line revenue, but your fee percentages, et cetera. This is going to give you the ability to do cross comparisons to see which provider is having the most success with, which ones are costing the most in fees due to difference in the fee structures or chargebacks and refunds. You know, so proper reconciliation of this every week will be key to ensure that you're getting 100% back that is due to you. Now, looking at the map here, you'll see when you're calculating fully loaded costs for these services, it's not just the fees that you have to consider or the processing or commission, but it's also, you know, you've got labor that's going to be required to prepare the extra orders, manage the tablets, package the food. You're going to need to cost out your new food costs if you've changed portion sizes or you've changed pricing on it. And under normal circumstances, you could disregard some of those fixed expenses like occupancy and utilities that you would incur anyway. But since you actually don't have that dine-in right now, you actually need to consider those exclusions differently as well. But a big one that I think I haven't even touched on yet, Brian, are the to-go packaging costs. And I know those are up and down and all over the place and a lot of things to consider there.
The costs are something to consider, but when we looked at the statistics, there were actually some surprises to me as well. Check this out. So look at some of these. 57% of consumers agree that packaging makes a big difference in takeout food quality. 47% will pay more for takeout food if better quality packaging was provided. And 54% of consumers say the quality of the disposable packaging reflects on a restaurant's image. I don't know about you, but there's a certain emotion that cheaper to-go packaging invokes in me, and I instantly think differently about the restaurant and think differently about the sanitation processes happening in the background of the restaurant. The packaging matters. And this is also a good time for me to bring up that we do at RSI have an existing rebate program with DART on disposable items, which can be bought through your broadline distributor. The rebates apply to the DART labeled products, so not the distributor labeled products. But you have any questions regarding your purchasing rebate program, just like everything else, you have resources at RSI. Please reach out to your RSI operations specialist, either by phone or support request. They'll put you in touch with a member of our purchasing team to talk about that program with DART. Another thing that was interesting to me is look at the rest of the stats regarding sustainability. So millennials specifically, about 75% of them are altering their food purchasing habits with the environment in mind. And 36% of consumers are willing to pay an additional charge for eco-friendly takeout packaging. So not only does the packaging matter, but also the sustainability matters. When you're thinking of, or when you're considering options for to-go packaging, there are many things to consider, including single-use packaging, secure packaging. So not only is it sealed like we talked about before, but is my soup going to leak all over as soon as I put it in my back seat? And presentation, you really have to think about presentation. It might used to not be a big deal for you. It's just kind of a tiny little incremental piece of income for you. But now that's a bigger part of your income, this is your brand. So as this revenue center grows, you must consider this as a representation of your brand. When reviewing your menu for this to-go revenue and how it's going to look, and you want to evaluate what you're going to offer, a lot of things to consider, including does your menu lend itself to delivery? Consider limiting your menu items you offer for delivery and to-go if you know the product does not travel well. If you know your French fries are going to be hot for only 5 minutes, and when you microwave them, they get soggy and not good, maybe it's time to consider a different kind of French fry to-go, or maybe it's time to limit some of the sides you offer and only do the things you know are going to hold up. This is your brand. We're going to keep saying that, and you need to consider how it looks after 20 or 30 minutes. Maybe for things that don't hold up, you're better off preparing meal kits for the customers. We've seen a lot of restaurants do that with some success. And those meal kits, they can cook the menu items at home. It's kind of a fun, engaging thing to stop the boredom of being quarantined, right? The more you are able to adapt to the new normal, the more successful you'll be. Whenever you're changing your menu items, Sid mentioned it a little bit earlier, but you also have to consider what's going on with the pricing too. So maybe you need to change the portion size to make the most out of this to-go presentation, and because you're filling up a box instead of filling up a plate. But with any recipe changes, you have to consider the recipe costing and make sure it's still aligned with your budget. And lastly, can you execute your offerings efficiently? More streamlining considerations need to be thought about. Should you set up your line differently to make the execution better? Sid, all these menu solutions go hand in hand with some of the marketing considerations you should be thinking about as well.
Yeah, absolutely. I mean, plain and simple, ideally, you want to reduce the fee impact as much as possible. And the number one way to do that is to brand your restaurant for online ordering. You must drive all ordering traffic to your website as much as possible. You know, restaurants can use any number of partners to accept orders. You can do it through your website, Facebook, mobile apps, Google, others. You don't have to use DSP. Having your own online ordering service will greatly reduce the true cost of working with DSPs. So With intelligent marketing on your online ordering platform, a restaurant can actually attract a far greater number of first-time and regular customers to magnify your profitability for your delivery business. So some tips for this, put in personal messages to your guests in every single order, directing them to order directly through your website, not the DSP platform. That is key for every single one of your delivery service providers. You want to direct all traffic to order through your website. You also want to consider integrating with, maybe you do a customer loyalty program to get your customers to order through your website. Offer exclusivity for specialty items on your online platform only, or even promotions when you're ordering directly through your website. The more you can, drive traffic to the website to get these orders in, the better off you'll be. Really done well, 25 to almost 50% of your delivery orders would actually come through your own online ordering service instead of through the delivery service platform. This will be a huge cost savings when it comes to the fees. So the process for this really begins with having a revenue-driven website that's set up for online ordering and that can be easily managed internally. You want to be driving the customers all their ordering needs to reduce those fees. So are you doing email blasts to all of your registered email users? You have alerts and banners to drive more eyes to your specials that are on your website. Are you including pop-up on your homepage to set up a primary call to action on your main navigation bar for the online ordering? A lot of times too, it's shocking to me. I see a lot of great food pictures of food and beverage on all of your guys' Facebook and Instagram pages. But then when I go to your website, I don't see that same type of content. So make sure you've got pictures in your online store. Are you driving business through your social media marketing to your website? Make sure all of those promotions on social media are driving all of your traffic to the website. Another key thing on your website is your menu text space and not PDF. Google cannot read images, so they can't read that PDF image of your menu. So customers are not going to find your restaurant online. This is terrible for SEO. And PDF menus, by the way, are not accessible by screen readers. So you are also not ADA accessible required by law. So a lot of things to think about when it comes to the website. And, I know many of you probably already know, but we've actually partnered with BentoBox to assist our clients with helping their website become more revenue driven. We have a number of clients that have used BentoBox, and not only have they seen a huge increase on the revenue that's being driven through their website, but their websites look pretty fantastic as well. Also, something else, BentoBox, during this pandemic, they actually created an online ordering platform and partnered up with people to be able to have an ordering solution for you. So this is also something that's available through BentoBox, and is some offers exclusive to our RSI clients. Now, some of you have been extremely successful with pivoting to 100% off-premise, and it's working well for you. We've got a number of clients that are actually doing very well with off-premise and delivery curbside takeout only. This is when you're might want to be considered bringing delivery service in-house or actually using some form of native delivery. So with this, if you're going to bring delivery in-house, you're obviously got to look into your insurance considerations. See what those kind of premiums are going to be if you were to actually employ your own drivers and have them operate their own vehicles, or maybe you buy vehicles, etc. For those of you that may be in smaller cities and rural areas where you might not even have access to the big three providers, then this might be an option for you as well to be able to get your food out there. With native delivery, how that works, if you are driving a lot of percentage of your sales to your own online ordering system, then instead of actually using a delivery service provider, you can set up native delivery for them, where you're just going to get charged a one flat fee for each order instead of those percentages, etc. This could be a huge cost savings for you as well. Basically when it's all said and done, off-premise isn't going anywhere anytime soon, nor for this foreseeable future. It is, for lack of better words, our new normal, and consumer behavior is going to continue to change and evolve as we come out of this. So you've got to be, prepared for this new model of service. It's going to be part of your future. So make sure that you set yourself up with the right partners, with the right providers that are going to be the best fit for you. Make sure that you know exactly who's responsible for collection and remittance of sales tax, and make sure your point of sale is set up. And most importantly, make sure that you set up your team and your guests for ultimate success on this. We're committed to your success, and don't forget RSI is here to partner with you on it.
Well said. We're in it with you. Okay, so we promised we'd save some time at the end, and we have a little bit of time, so we are going to get to some of the questions. Thank you. I saw some come in, and thank you for those questions. There are a few that seem real specific and real compliance specific to where you're located, and probably best to be answered by compliance. So here's what we're going to do. We're going to, if one of those came in, we'll answer you directly. We'll do the research. But if you have a question like that, remember you have that resource at RSI as well. So get that question in through a support request to our compliance department, and they'll do the research and vet it out. So thank you for the thoughtful questions. There are a few that I also think will be helpful to share on this presentation as well. So let's see.
Yeah, real quick while you're pulling that question up, for the compliance side too, guys, if you don't know if you're supposed to remit tax, the first thing you got to do is look at your contract. So if you don't, if anyone has questions on whether or not they are responsible or your provider is responsible for tax, pull up the contract before you call us.
Absolutely right. Okay, I have a few here around the same theme, so I'm just going to pick one because I think it'll work. But obviously, this is a good one to share if there's a few different questions coming in this way. Sid, how can we control the quality and accuracy of those orders placed? Like you said, it's one of the biggest complaints that restaurants and restaurant owners have about third-party delivery services. What best practices or systems have you seen to make that good?
We actually talked about it a lot. We have to eliminate human error. So it all comes down to removing the person that is having to manually plug in those orders. So for those of you that are having multiple platforms, you might have 3 tablets and all those orders are coming in rapidly in a short period of time because it's peak dinner rush and everybody's getting their order in. And they're having to look at these tablets and manage all these tablets and then go manually ring all of these orders into the point of sale. Not only are you, not efficient with that, you're spending a lot of time that could, be spent somewhere else, et cetera, but you're now relying on them to make sure everything is getting accounted for properly in the point of sale. So first and foremost, if you have integration and you have that order going from the provider and into the tablet and all of this going into one tablet and that's been integrated with a point of sale, then you're actually removing all human error out of this. It's all going directly into your KDS printers and popping up the ticket without anyone having to touch anything. So first and foremost, the most accurate and efficient way of making sure that no orders are missed and everything is accurate is integration, plain and simple.
Sid, here's another one. You'll laugh because it's come in so often in so many different forms, but I think is another commonly asked question. Melissa asked, what are some best practices for handling negative feedback? How do you handle that? Do you offer a refund? Offer to take care of it next time? Do you have to think differently? I mean, we're in the restaurant business. We know how to deal with negative feedback. We know how to make it right for the guest. What changes if it's a delivery guest?
Quite honestly, nothing changes. You're putting your brand in the hand of the provider, and you cannot rely on them to take care of that negative situation with the guest. So regardless of who is at fault, and it probably is the delivery service provider that's at fault, you still want to own it. You still want to make sure you talk to the guests, that you do it whatever you can to make it right, to take care of them, etc. Definitely hold the provider available if you had to offer any kind of refund or chargeback, etc. But you still have to do that hospitality. That we are in the hospitality business and you cannot rely on the provider to take care of your guests. So unfortunately, there will be times when you're just going to have to step up and handle it. But I would certainly hope that most comps and discounts have actually decreased with going off-premise revenue dining these days. So hopefully your comps really aren't that large, if you're having to take care of 1 or 2 negative situations here and there.
Well said, Sid. And I'll add, it doesn't hurt to have that conversation with your delivery service partner as well ahead of time and say, hey, how will we handle this? And make them, it should be a partnership, right? You should both be in it to win. You should both own mistakes. Some delivery service partners I've heard are better at that than others. But no matter what, it's your brand. You're going to make it right with the guest, exactly like you said, Sid.
I agree, Mark.
Sid, Josh asked, do you recommend a separate GL account for each delivery company? I'll let you take this one.
Absolutely. It'll be your most accurate way of being able to determine who is reconciling and matching off to what is owed to you and who isn't. If you've got 4 providers and they're all going into one GL, and those deposits, we all know those deposits are very difficult sometimes to, track and match up to the statements, et cetera. You've got some providers, paying you on a weekly basis, some on a monthly basis. I would definitely have each and every separate provider their own GL on your P&L so you can accurately go back and, do an audit on them at any time and make sure everything's matching off. That would be my recommendation for sure.
Completely agree. Okay, so like I said, we did get a lot of questions in. If we didn't get to your question just now, we will be answering you directly. So don't feel like we're ignoring you. We'll get to you. And thank you so much for those questions that came in.
Yeah, thank you. And I do want to say one more thing, guys, and I don't think I mentioned it earlier. One of the biggest mistakes that you can do with managing your delivery services, et cetera, is turning off your tablets. By turning off ordering during peak times. This is #1 mistake. You've got to learn how to manage of not ever turning that ordering tablet off. And I know we're all guilty of it. It's middle, we've got orders coming through like crazy. We can't keep up with it. It's madness and chaos going on in the kitchen. And we just let's just turn it off for 30 minutes as we get caught up. That can be one of your biggest mistakes. If you've got a customer coming in for first time and they're scrolling through and they find you and then, oh, sorry, I can't order right now. I'm going to turn them off and you may never get a second chance to get them back. Or if they're one that's ordered from you before, but every time they go in at 7 o'clock at night, they can't order because you're too busy to accept orders. They're not ever going to come back to you. So you've got to find ways to never turn off that ordering, delay it, push it back, make your delivery window time longer, but don't ever turn off ordering. That's my final thought of the day.
Sid, no, I'm glad you said it. The key thing I took away from that was you may lose the order for that day and the revenue for that day, but they may never come back to you as well. So you really have to think big picture and find a way to make it work. I'm glad you brought that up.
Well,
all right. Well, thank you everyone for your time today.
Thank you so much, and reach out to us if you guys have any questions. Thanks. Bye.
All right.